Hey, what's going on, guys? Corey Smith here, CoreFX, bringing you another live pre-week market analysis video here. Today is actually Monday, October 16th, so we're a little bit late here with this video. I was away this weekend, had some delayed flights coming back, and unfortunately, it was a last-minute trip that I had to go on and wasn't able to get this done in time. But as some of you might know from following me on Instagram, I'm actually switching these videos over. I'll be doing them now through T3 Live. It's a division of T3 Trading Group. They're a trading company, one of the biggest trading companies really in the U.S. They're a publicly traded NASDAQ company, but I'll be reaching out to most of you guys that I have contact information for to notify you of the new page. I'll be uploading these videos too, as well as more to follow in the future. But I just wanted to go ahead and open this video up anyways, as the week hasn't really even started yet as far as news goes. Our first big event is in about 40 minutes here, 5:45 p.m. Eastern Standard Time. So I'll go ahead here and jump right into it. I'm going to try to make this one as quick as possible since we are a little bit into the week here already. But beginning with the U.S. dollar, as you can see here on the chart, last week we had a sell-off with the dollar, and we came and hit this support down here at around 93, and it held support. Um, this could be the formation of the right shoulder to this inverse head and shoulders here that I've been talking about for a while now. As you can see, price has been in this downtrend, but it bottomed out here, came up to hit this resistance, and now is forming what could be the right shoulder to this inverse head and shoulder. We'll just have to wait and see how the dollar reacts this week, but that is a very possible potential. If it turns around and breaks this 93 level here, I'm going to switch to a bearish outlook. But as of right now, I'm waiting to see if this right shoulder can reverse and continue to get this reversal. This what looks like the beginning of a new rally where we have the first leg here, second leg here, and then we could get the third wave, push higher with Elliott wave theory to get a higher high set here if this formation works out. Switching to the euro, as you can see the exact opposite, as you have this left shoulder formed this head, which was also a mini triple top head and shoulders pattern in here, rallied, fell off here, came back up to hit this resistance, and is now selling off again off this 50 SMA, crossover the moving averages. This could be setting up a right shoulder, and we could see a big longer term reversal here in the euro as well. And the Catalonian crisis going on in Spain could be continuing to weigh on the euro here as we move forward. Taking us to the Japanese yen, as you can see, we had a stronger week last week, but we hit this 200 SMA, also a strong weekly resistance level. And as you can see with this arrow I've drawn here, I'm expecting the yen to now fall down back to around the 85 level. We'll have to see how it plays, but that's my outlook to begin the week. Takes us to the pound, and as you can see here on the pound, I have a Fibonacci up, but it was a pretty choppy week for the pound, as it was a roller coaster of events. So no clear technical picture, but as you can see, it did have this strong sell-off over the past few weeks, then this rally up, and we've hit the 20 SMA, which is now sloping downward, which is the 50 Fibonacci level, and it looks like it could be now continuing to move another leg lower. We'll have to wait and see how that is, but overall, we had a little bit of a choppy price action coming out of the pound. Canadian dollar last week rallied up to this strong resistance level here, where the 50 SMA also is. We've got basically this rally up to strong resistance and continue to roll over now is kind of confirming that we've switched the trend to potentially now being a downtrend. We're trading below the 50 SMA. 20 is about to cross under the 50 SMA, sloping downward. So I'll be looking for shorts here in the CAD moving forward. Swiss franc, as you can see, we finally broke out of this range the other week, broke down lower, rallied last week to up hit this zone again, but it's now acted as resistance, and price is starting to begin to reject off of that. So we'll see if we continue to get weakness in the Swiss franc here. The big thing I'm watching with this is this 200-day simple moving average right here. If price breaks below that, I'll definitely be looking for shorts with the Swiss franc. Aussie dollar, you saw we were in an uptrend. We broke the trend line, broke through the SMAs, crossed over, switched down. Then we had this strong rally, but this is pretty similar to kind of what the pound's doing. It's rallied up. Now it's hit this resistance level and bounced lower. We'll see if it can continue lower back down to 77.50 region about. That takes us over to the Swiss franc. Sorry about that, New Zealand dollar. And the New Zealand dollar, as we've been watching for a while now, broke out of this support level, rallied up all last week, and has now retested this support turn resistance at 72 here. We've got what looks to be a tweezer top formation forming here. We'll see if that's enough confirmation for us to roll over now and send the New Zealand dollar back down to about the 70.50 zone. But that's what we're looking at here with the majors. Um, some good setups looking this week, and we have a really nice week as far as news goes. So pretty excited trading this week. We'll see how it goes. Covering last week real quick, what went out, what happened last week. Sunday, pretty much nothing happened, and then moved into Monday. Stock markets were slightly lower off record highs, and then pretty much the rest of the week they were blowing out through in a record territory. Nothing going on Monday as far as events goes, and then Tuesday we had early AM out of the UK manufacturing production, which beat expectations, but we had the goods, the trade balance missed, so we had a little bit of choppy price action out of the pound. Um, Not too much clean tradable moves going on. But then Tuesday, what kind of set the markets into a rally all week and blowing into higher highs was the International Monetary Fund, the IMF, basically came out and said the global economy is growing at a stronger pace than they had expected, and they increased the growth outlook for the end of this year and next year by 0.1%. So the end of this year they increased it to 3.6% growth, and next year they raised it up to 3.7% growth. This is very bullish news for the global economy, and we saw that in the stock market rallies basically universally across the world. Um, Another event that happened last week that's not on this calendar, that's another geopolitical thing that I follow here to try to keep you guys up to date with, as it's not really news that's easy to find. You kind of got to be following it quite often to stay in touch with. But in Spain, the whole Catalonia referendum I went over last week. Basically, Catalonia is a region in Spain, Barcelona being the capital, one of the wealthiest regions in Spain. But it's pretty much entirely unique. It's got its own language, culture, flag, anthem, you name it. It's under Spanish rule, but it even has its own government. Um, so it has its own police forces. They're basically their own, but they're under the rule of Madrid and the overall Spanish government. And they, for a long time now, wanted their independence and kind of feel like they're providing a lot of wealth to the region and not being treated fairly and taken advantage of by the Spanish government, I guess you could say. But um, they went ahead and had the referendum, and they had this vote that was very controversial a couple weeks ago, and the Spanish government basically said the referendum vote to become an independent body was illegal, and they sent police forces all over Spain to prevent the voting from happening. But people turned out and voted anyways, and 90% of the votes turned in were in favor of the referendum. However, only 43% of the population turned out for the vote. A lot of this was again because there was thousands of police everywhere trying to stop voting from happening. Hundreds of people were injured. So now the vote referendum passed for independence, and however Spain is considering it a legal vote and it not mattering. So the president of Catalan came out and said he wants to delay the referendum from happening and basically suspend it for 2 months to open discussions with Madrid so that they can peacefully negotiate a right way to do this. But Rajoy, who's the prime minister of Spain, pretty much asked, because the Catalan president was saying like the referendum passed, but we're suspending it for now. Basically, the prime minister asked to give him a clear answer of if they're going to withhold the referendum or not. Simple yes or no answer. And he basically told him if he does uphold the referendum, that since it's illegal, they're going to remove the Catalonian government, president included, and Madrid's going to take over direct rule of Catalan, almost like a martial law type of situation, and remove the government there until there's new one elected. Pretty much why this matters is it's just, it could cause damage to Spain. Hopefully, it's not going to break out into an armed civil war or anything, but it could cause damage to Spain and the region economically. And it's basically just another case of instability going on in the Eurozone with the whole Brexit and everything going on, and all the financial crisis they faced. And it could just trigger more secessionist movements in Europe, more countries wanting to withdraw or regions wanting to withdraw, or just the overall movement is not good for Spain and the Eurozone. So far, it's unaffecting to the Euro as of last week, which is pretty big, but I think this week it's starting to weigh on investors a little more and starting to pull the Euro down a little lower, so it's definitely something to keep an eye on. And I think it's one of the most overlooked events going on in the world right now as far as politics and economics goes. But after moving on to Wednesday, we had the FOMC meeting minutes. As we go over, this is released after the Federal Reserve has their central bank meeting, and it's just a more detailed um, depiction of what happened in their 2 day meeting they had and their rate statement. And basically, the main summary to get out of it was that some of the members were worried that the low inflation readings aren't just transitory, like short term problems, that they could be more problematic. And the US dollar, this is what the sell off was last week, pretty much was due to, and how it temporarily broke that level of 93, but then held that support and kind of rallied off of it. Um, then we had on Thursday the PMI numbers came out meeting expectations, but the PPI, sorry. These are the producer side inflation numbers. Meet expectations and then beat it with core PPI. Unemployment claims weekly report, not that big of a deal, but that beat expectations as well. Then we had Draghi speaking. Draghi spoke on Thursday. Um, really gave no direction on monetary policy or anything affecting FX, so the euro was unchanged around it. Could have been a big event as they were talking about monetary policy, but he was again doing what he does often and kind of just dodging around it and generally speaking, so not giving any specifics or anything to try to avoid any, I guess, FX movements, you could say. Then on Friday, we had the CPI and core CPI. The CPI and core CPI both missed expectations, which this is the number one inflation number being watched right now, pretty much across the world. It's the consumer price index that shows the average cost of goods, and we're still not seeing a pickup on inflation. Now, Janet Yellen came out this weekend and basically said she still believes that these inflation numbers are going to continue to pick up. She thinks that the effect that the hurricanes had is going to temporarily mess these numbers up, and that by the end of this year, expansion should continue to pick up, and this inflation should pick up and start moving more towards the target of 2%. But as we know, this is very, very closely watched right now and something that we're following closely. And she did say that the Fed's still anticipating on the gradual rate hike, so there's still a expectation of hikes to be happening in December, third rate hike this year. So not too much has changed off of this, but if this number continues to miss, this is going to be very big implications on the U.S. dollar, and we are honestly probably going to begin being worried more about how the central bank's going to be moving forward with interest rates and if they're going to be hiking as often as we are anticipating right now. The retail sales out of the U.S. missed as well. Core retail beat. This is excluding the manufacturing of, the sales of automobiles, because that's pretty cyclical and volatile. So they kind of tend to get that out. So the more direct number is beating expectations, which is a good sign. But core CPI, including the automobiles, did miss. Again, repercussions of the hurricane most likely coming up. But this takes us into this coming up week. As I said, it is already Monday. So Sunday and early Monday has already happened. This big week, we got a lot of inflation numbers continuing to be the spotlight of FX. And this week we have some numbers to be watching there. As we've now entered a rate hike cycle, central banks are going to be increasing the interest rates, as we've been seeing the U.S. do all year, and now Canada has joined this year as well. And most other central banks, aside from Japan and some others, are looking to hike rates more so now than they have been over the past 10 years. So the inflation reports, mainly the CPI, but all inflation reports are going to continue to provide great trading opportunities for us. So this is something we're going to watch really closely. Beginning Sunday night, we had Kuroda speak, the Bank of Japan, which is the Japanese central bank. Said basically that the Bank of Japan will continue to pursue expansionary monetary policy. This is keeping interest rates low, as we've seen pretty much all central banks do the past 10 years, to encourage borrowing and try to stimulate the economy that way. He said until the inflation target 2% is kind of more within range, he's going to keep it low and get the economy jump started again. They have a different situation going on in Japan, though, so that's the reasoning for all that. Then Yellen spoke, and she said she thinks the low inflation is kind of surprising for the year, but doesn't think it's that big of a deal and expects it to pick up, and they're going to remain hiking rates gradually as it does. And like I said before, she said that the hurricanes have temporarily caused weak numbers, but thinks the economy will pick back up by the end of the year. Then we had numbers, CPI numbers. Again, these are these inflation reports out of China. CPI was as expected. PPI beat expectations, so there's strong numbers there for inflation in China. And then today, we will be watching in about a half hour. I'll be trading this event live, the CPI numbers out of New Zealand. This is going to be, the New Zealand dollar has been weak all year. Behind the dollar, it's been one of the weakest, and it could begin to it has room to the upside basically because of how weak it's been. And if we start seeing a pickup in these numbers, and they've been very dovish, the central bank and the Reserve Bank of New Zealand over the past few weeks and months. So if we start seeing some stronger inflation numbers and CPI numbers coming out of the economy, this is a great trade that we can look for a reversal and some strength to return New Zealand. So I'll be looking to look for some trade opportunities. Also, could continue to sell off if these numbers keep missing. So I think overall New Zealand's going to be a good mover off this event. And following right after, it's the Australian dollar. Their meeting minutes, again, like I said, they reported after the RBA statement. Just more detailed, just like the FOMC's meeting minutes, more detailed report of their meeting that they had. So that's something to watch for the Australian dollar. Taking us right into Tuesday, we have the pound CPI numbers overnight. Again, these are the inflation numbers that we want to watch really closely, especially in the UK with the whole Brexit situation going on. Any weak numbers coming out of there is going to continue to weaken the pound as the Brexit looms overhead. Really is going to be it's something big to continue to watch. And then, but the Bank of England central bank over there, Carney speaks before the Treasury Select Committee. So that's another thing to watch, as any comments from him could be a good movement provider for the pound. Wednesday overnight, Draghi speaks at the European Central Bank Conference in Germany. Again, just watch the rhetoric out of him. And then the pound has average earnings overnight Wednesday. That's a great trading report typically. Average earnings out of the UK is a big thing being watched lately, as wage growth has been staggering pretty much across the world, but very big time in the pound, and they're expecting it to suffer even more as these trade deals and all come to being with the UK, Great Britain leaving the European Union. So this is something that's very closely watched. Beating numbers out of this would be pretty great. Would be pretty great news. As you can see, it's been pretty mixed and ugly numbers here. So if this beats expectations, that could bring a nice strong move back to the pound and give us direction for the rest of the week here. That moves us on to another huge event of the week, Australian dollar unemployment report. Comes out every month. It's the NFP out of Australia. So it's a great trading event. Always big moves around this. Following that, Chinese GDP and industrial production, as I go over continuously in these rooms. One of the biggest economies in the world, so their GDP is they're going to be their biggest gauge of their economic situation and how much they're growing as a nation. So this is a big number to watch, and they're a huge industrial powerhouse, so their industrial production numbers are a big number to watch as well. As you can see, this is given the red category. This will have a big impact on the overall outlook of the global economy, stock markets, things like that, which all are interrelated with the currencies. Taking us into Thursday, we have pound retail sales overnight. Again, every number out of Great Britain is being watched very closely with the whole Brexit looming. So this is another very tradable news event. And then Friday is another huge day. With the Canadian dollar, we've been seeing the sell-off with some weaker numbers after they started to hike rates again. So we'll be watching for this. Some strong numbers coming back out of the country. We could see the turnaround of the Canadian dollar and some strength return to it. Or if these numbers miss, we could see a continued sell-off of the CAD, as the central bank might be a little weary of their interest rate hikes in the forward here moving on. And then after the market close on Friday, Yellen speaks. So this is really just something to look for Sunday night gaps. Nothing really too crazy or eventful to watch. It's not like we can trade it or anything. So it's just something to keep an eye on for holding. If you're holding U.S. dollar over the weekend, I'd be very careful with something like that going on, just because you can suffer from gaps over the weekend. That wraps up the fundamental news. Wanted to do this one quick. As I said, next week I'll be starting to do them with T3 Live, so I'll definitely be on there, and I'll definitely be covering a lot of material. So make sure you tune in and subscribe to them so you can be notified whenever I have a new video going. They're called T3 Live. They're huge. You can just YouTube them, search them up, and you'll be able to find that I have a channel already on there for Core FX pre-week. Just get on there, subscribe to them, and keep an eye out, and you'll see my new videos coming up. I'm going to go over some technical analysis real quick here. I'll just cover the majors for you guys. And as we see with the euro and dollar, this is the euro versus the dollar. So this is going to be this is for one, the biggest traded and moved pair in all of FX, but also the number one pair traded against the dollar. So the US dollar index is looks very similar to this chart always. So you can see this head and shoulders formed with that smaller head and shoulders at the head. And you can see this shoulder looks like it may be forming until the neckline is broken here at around this 117 here, where the red line is. Until that neckline's broken, we don't have a valid head and shoulders, but it looks like it is creating this right shoulder here after it came up and hit this support. Turned resistance here at around 119 to 118.50 area. But another great setup that we're looking at here. Moving averages is now crossed over. It bounced off the 50 SMA. Beautiful little sell off, setting a new lower low, lower high, which set it up perfectly for another lower low. The pound here, I called on my Instagram account that this looks like a nice short to me. Um, After this strong sell off here, kind of reversed the trend here into these lows being broken, this area being broken, and now setting new low. Shot down, broke the 50 SMA. 20's now rolled over, and as you see, if I throw a little Fibonacci out here, you can see that we have had price rally back up to about the 50 SMA. The 50 Fibonacci level, hit the 20 SMA, threw a little shooting star candle here, and now a bearish engulfing has closed on that. So I'm expecting it to roll over back to at least like the 50 SMA to 131 area. We'll have to see what goes on with the US dollar, but it's not a bad chart as well. And then we have the New Zealand dollar, US dollar. Again, we're in a downtrend here. We broke the 200 SMA, rallied last week, came up to hit this resistance 20 SMA, but we've got tweezer tops and another little doji top here, so this could also sell off and move lower if we get that US dollar head and shoulders to form. Dollar Canadian, we had this strong sell off, bottomed out, and then shot all the way up, and has now reversed the trend here. We set a new higher high, pulled back a little bit, retested the 50 SMA, and this broken support, then turned resistance, then broken, turned support again, and we could see this continue to the upside as the 20s crossing above the 50 SMA and price is now trading above the 50. Australian dollar, as you can see here, we were in an uptrend, violated the uptrend, broke this trend line, 50 SMA, lower low was made, now has rallied back up. We could see this as well, bounce off the 50 SMA-ish area here. This is also a strong zone if you look at all the wicks and strong moves away and rejection along this area. This was a strong zone it hit. We could see this continue to roll over as well. And as well with all of these could also, if we see this bounce a little lower here, this could continue higher and shoot right back up to these highs or anything in there. So there's always two sides of this, and never anchor yourself too much to one belief. Always just be ready to change with the markets, because no matter how much you want something to happen, the market does what it wants. So I'm just showing you my opinion of what is most likely to happen in my eyes, but it could very easily go the total opposite way, and we could be looking at totally different things. So make sure you keep an open mind with this stuff. Dollar yen. This has been a sloppy chart, not too favorite of mine. If you see the last couple weeks, there's just been a whole lot of indecision. Wicks on both sides. Got a little rounded top here. It hit this trend line, but again, not a very favorite chart of mine. It did just hit the 200 SMA. It's above the 50 still, so we could have this be a strong move up. Little retracement. We'll see if we can throw a fib here if we got any. Looks like it might be a 23.6, but yeah, it's around a 236 retracement level. So this could rally and continue higher and set a new higher high, but could also very well roll over and crash down to the downside. So we'll have to wait and see here. And dollar Swiss franc, another one that hasn't really been the nicest chart. I was pretty happy when we came up and broke above this resistance here, but then we got this ugly shooting star off the 200 SMA, and price did sell off a little and has just been range bound here. But this has been making higher highs and higher lows. So as you can see, the buyers have been pushing this higher, and we could see this continue to the upside after throughout this week. So this is another thing to keep an eye on, but we are somewhat still in this weekly range that it was in. So until we break up above it and really above this 200 SMA, I don't really have too strong of an opinion either way. But that pretty much covers it there, guys. Again, I appreciate you all tuning in and watching these videos. I hope you get something out of it. Please leave feedback. Let me know. Comment, like, subscribe. Shoot me a message. Anything you want. Email on my Instagram at core.fx. I answer everybody all day long. Always open to questions. I love helping people out, getting your feedback on what you'd like to be covered in these videos. And don't forget, next week, stay tuned to T3 Live. Find my channel, CoreFX Pre-Week. I'll be doing the videos through there. I will notify you guys if I have your contact info. But thank you very much. Have a great trading week, and I'll talk to you guys next time.